Hello everybody, my name's True Demon, and I'm the Devil Stockbroker. This clip is from our Demons meeting that occurred this Sunday at 1 p.m. Eastern, where we discussed preparation for the market on Monday. In this video, we're going to cover some of the tickers that Hell's Trading Floor has been tracking and looking for the best opportunities and plays for us to make profit for the trading week going forward, as well as setting up a long-term trading plan for us to go forward through the rest of this tumultuous market and come out the other side of it successful and more wealthy for it. If you guys want to be a part of this adventure, please consider joining Hell's Trading Floor at hellstradingfloor.com, where you can get access to all of the tools, training, and experience of all the other members of Hell's Trading Floor in order to help make the market work for you. Thank you guys for watching. Have a hell of a time in the markets. All right, I'm going to go and I'm going to go start looking at some charts now. We got a few things cooking in the market that I wanted to cover. You guys have any tickers? I've got, so far today, I've got Johnson & Johnson and Tesla, requested by Grilled Rockfish. Thanks, dude, for letting me know. If you guys want to come up with other things for me to cover ahead of time, you can let me know in the Devil's Wishes channel that I have set aside for you guys. And that's not just for like ticker requests. It's literally if you just want to ask me like how the weather is where I'm at, like you can ask me whatever you want. But the yeah, if you let me know what you want me to look at ahead of time, then that'll give me some time to do some analysis on the charts before we go into these. But we'll start with the SPY and cover the market. So far the market's outlook has been pretty sketchy. Like we've been in this chop for a little over a month now. What I was trying to do was compare this. I was trying to compare our current market conditions to what we did back in June, July, because that chop is very similar. Like it's a really close chart pattern to what we saw there. So if we compare these charts and we see this downswing move that we had, this was, let's see. We had one move straight down that took us all the way down to our floor. It was about a 13% move to the downside over the course of 9 days. We had something similar in September when we had that September peak, and then we sold off from there. It took us 18 days to drop down to our low from that point. So we had a slower drop, but it was still pretty much on par. Now we had one lower low from that point forward, and that was a 8% drop that immediately turned around, and we saw the market completely rebound from that point forward, and we regained all of those losses. We took back 6% of the market that day, and had a slight retracement the day after. So right now, I'm looking at this market and thinking like this is an inverse head and shoulders forming here. We've already had the diamond bottom, or so I believe it to be a diamond bottom, based on the shape that we formed. So very similar, and we may have had a breakout. There is a possibility that this has not fully formed yet, and we have to make one more high and then take another drop to the downside in order to retest support, and that's kind of what I'm expecting here. So rather than this having been the high, I'm kind of expecting us to challenge this resistance one time and then retrace back about probably about the 50% retracement level. Maybe the 38, but I'm hoping for the 50. So if we get a bounce rejection off of this price level, I'm looking for a return to 368, 365 range, hereabouts. Somewhere in this area, I believe we've got some support. There's quite a lot of volume that traded at that price, right where you see this red line cutting the diamond in half. That's where most of the volume is at. And diamond reversal patterns tend to want to return to that baseline before its breakout. So assuming that this is still early, then this breakout is just a fake out, and we'll see a return to that. If we do end up breaking 379 and we hit 380, then we'll need to break through our 200 period moving average on the 1 hour. let me make sure that I've got this on the right. All right, so this is exponential moving averages right now, and we're actually at that 200 period moving average. So this is actually kind of changing my thinking a little bit. I thought I was already on exponential moving averages. So since we're touching this 200 period moving average, we'll have to see where we open up on Monday. But assuming that we open higher on Monday, and we close above this, or we open above this 200 period moving average on the 1 hour, then I definitely think that we'll end up filling that gap. So wherever we open at, say we open right here at resistance, I'll expect the market to sell off into the beginning of the week, and we'll see some opportunities to capture profit on the way back down. Just because every time that we've gapped above this 200 period moving average, we've needed to we've received pretty quick rejection from it. So we had this one case where we gapped up and then rode above it, and then we closed a day above the 200, but then we gapped down immediately after that and started selling off. And just to reiterate what I had been saying over these past couple of weeks, this is pretty much where I believe the market bottom is for the year. Not the market bottom for this entire crash, but for this year, I think that this is pretty close to our bottom, and that we're going to go into a holiday rally, or at least we'll see some bullish momentum from the market going into the holidays, assuming that no other major crisis causes a panic. So we got to keep a close eye on the news, because obviously right now the news is ruling sentiment much more than technicals. So that's something to bear in mind. The other pattern that I also see in here is that we've formed an inverse head and shoulders that you can see here. So if we have hit a high on this, and that this is the shoulder, then we've already broken out, and we'll see ourselves breaking past 380, and then we'll hit this target easily. But assuming that's not the case, and we still have to test this resistance, then this actually puts us at a much better, this puts us at a much more fully formed inverse head and shoulders. So I'm going into next week slightly bearish, expecting there to be a gap up in the morning, and then for the market to return to test these lows somewhere in this range. And then once we hit a take profit in this area, we'll start to rebound, and then we'll crack through this resistance going into the first week of November. Things are probably going to be really choppy, though, and volatile because of the FOMC and Fed meeting minutes that will come out on the 2nd of November. 2nd November is going to be a really important date for us. Not this week, but the week after. So I have a feeling that we'll get if we get the fear out of the way, and we get this big sell-off going into the FOMC meeting and the Fed speakers, then that will actually be good for a rally going forward, because that will give us that flush down that will entice investors to buy at the low prices somewhere in this range. If we do end up getting back here, then that can give us the springboard to make a powerful rally and push back to, as I'm going to say, like 390 is going to be where my take profit is for any holiday rally that occurs. But we could go as high as 400, or maybe even touch the 410 level that we did in September. It's possible, but I'm trying to stay really conservative with these estimates, because we are still dealing with a very dangerous bearish market. Nothing has changed in our current financial conditions across the global economy that gives me any faith that this crash is over. As a matter of fact, things are just getting worse now. The housing crash is still continuing, and even if we do get a brief relief rally in the real estate market, I don't anticipate that this will be enough to save anything. And in fact, I only think that it will provide more liquidity to the market going into spring of next year for the next big major sell-off, just in time for everybody to go and finally put all their homes and relist them up for sale for the spring selling season, and for us to get a true picture of just how desperate homeowners are to get out of their houses before before all the buyers dry up, because buying demand is just gone. Buying demand for homes is gone right now. Any institutions that have already gone to cash are patiently waiting on the side right now for things to completely collapse, and this is going to create more problems for the rest of the equities market. And I know that might feel a little bit like, how does that connect? How does the housing market and the equities market connect? Well, that MBS problem is still the thing here today. MBS makes a great collateral device. So collateral right now, every major financial institution is really desperate for collateral these days. So that's going to create some difficulties for them going into next year. If they don't have any safe haven stable assets to run to for consistent returns, then and those MBS become more of an anchor than a benefit to them, then they're going to cut it loose, and that will create other problems in the market. We'll start to see sell-offs in other assets. Why don't we jump into Tesla? So Tesla, to me, looks like it's hammered out a bottom. We had a really clear double bottom pattern that formed here since last week's trading session. If you go out to the 1 hour here, we see that their earnings were pretty bad, and we did get that really quick sell-off that occurred. But when you look at their chart, you can see that we've hit this floor that it hasn't wanted to break past. Now we have a resistance above us at 220 that can really provide a once we break through this level of resistance, I think that Tesla can be one of the leaders of the next rally going into the Christmas season. And shout out again to Grilled Rockfish for calling this out to analyze for today. To me, Tesla looks like it's formed, or it's begun to form, a diamond bottom pattern. We'll still have to wait and see to get confirmation on it, but so far it's looking pretty good. Most often, what we see in these diamond bottoms is will be a inverse head and shoulders in them. We need to give this plenty of time to play out. We don't want to front run this too much, because it's really easy for us to get trapped in a range and just chop around for a long time. If that happens, then options contracts on Tesla, which most people are going to be playing these very short term, are going to get cut up pretty badly in the market, just because you'll get bled out by theta. So this is one to be really careful of. You want to make sure that you get a clear breakout and a close above this resistance line. We have to make sure we close above 222. Otherwise, there's no point taking the trade. If there's not enough volume and not enough interest to trade Tesla back above those levels and keep it up there, then there's no point taking that trade on short-term options, because theta will just eat it. So wait to see what Tesla does next week, and make sure that it's not just range bound. Don't get too excited if it moves like $5 or $10 really quickly. If it doesn't break out above these resistances, then none of it matters. It won't mean anything unless it can get past that wall of selling here. Once it does, there's far less volume traded in this area, and there's a huge gap here in Tesla's chart that can provide plenty of room for it to run. So this area of trading is basically a runway for Tesla to make a really quick rebound. And even though there's still quite a bit of volume in these areas above 240 and 250, if it runs this much, if it can get going and that momentum gets started, then I think that Tesla can recapture 266 or even 270 and challenge the top of this megaphone. Keep in mind, I've been watching Tesla really closely and analyzing on the long term. And on the daily chart, you still have this huge megaphone continuation pattern, which is bearish. Like, it is long-term bearish, but we still expect Tesla to touch the tops of this megaphone at least one more time in this market. It may not get all the way up there, but it may try. So this is the more achievable target at 265. If we see Tesla break this resistance and get back above 220, then maybe we see Tesla up at 260 again before the end of the year. Grilled Rockfish also asked for Johnson & Johnson, so we'll take a look at them. J&J, this is a nice defensive play. Johnson & Johnson is one of the safer stocks in this market, I feel. The company's very stable. They're both a producer of medical grade products and consumer staples and consumer cyclicals. So it's a pretty safe asset. It's definitely one of the more stable ones. If we go out to the weekly, just to go and see what Johnson & Johnson has done, like, nothing has stopped it. Nothing in the market has been enough to stop Johnson & Johnson, just because their products are used in everything. And everybody requires something that they make. And since they're so prevalent in the market, I don't think that there's enough volatility in the market to really stop them from remaining profitable consistently. So this is one of the companies to throw money into, to just keep averaging down and keep building up momentum. But I think that what Grilled Rockfish wanted me to look at and was pointing out is that we had this bear flag form on Johnson & Johnson since we had a sell-off in the market, and it actually broke out to the upside. Actually, now that I'm looking at this, this is actually this actually looks like it's forming a bit of a diamond bottom as well. We'll see. We have a megaphone. We have the first megaphone that's formed here. Now it has to complete another megaphone back to the downside. So it would have to chop around in these areas. So there's the possibility that Johnson & Johnson is forming a bottom, but I'm seeing rejection up here at the 200. So this is kind of a problem right here. Looking at the daily on this. So although it looks like it's finding a bottom, I'm seeing the possibility for a big rug pull here. We had a double bottom breakdown here, so it was trying to form a double bottom in this area, but we've had two candles closing below that support, the wick of this candle. These two closes below are telling me that the market is not accepting this bottom, and it's very weak here. So what I'm imagining is, if Johnson & Johnson, it has already filled this gap that formed here back in August, and if it does not get above this 200 period daily moving average, and I believe this should still be my exponentials. Yes, it is. Okay, so we still have exponential moving averages. This is a pretty consistent. Metric for rejections. We've seen Johnson & Johnson bounce off of this multiple times and attempt to break through, and now it's broken below back in August. Now it's trying to break up through it. I'm thinking that there's going to need to be at least one rejection from this moving average before Johnson & Johnson will keep running. So now may not be the time to get in. There may be opportunities to get in down in this price range. These diamond, this megaphone pattern, which could be the beginning of a diamond bottom, we may see this turn around very quickly to the downside and reject almost immediately. what I would wait for is to look at the 1 hour chart. The 1 hour chart can be pretty insightful for this kind of trade where it's like really long term and you're looking to see where your ideal entry is. Let's see.
So what's interesting too, TD, is
Mm-hmm.
November 18th puts at 155 are huge, as well as the 180 calls. And this kind of makes sense when I look at the diamond pattern, because you could, if it rejects, those 155 puts would probably pay pretty well, and then you can take your entry long.
Yeah. What are those? You were calling out the November 18th calls first to me and pointing out the high open interest on that side of the trade. Um,
Yeah, 180, which is too far out right now, but
right. And then
I don't know.
what are the puts at for
One
those?
155 for the same date for the monthly in November.
Okay. Yeah, if I was to take a bet on this, I see a couple of patterns here. We've got an inverse head and shoulders, and that broke the neckline. Now we're right here at a very significant level of resistance. Like we're just now testing this resistance for the first time in the last 2 months. So I would be taking profits on my long positions here and then enter into a short position as soon as I see weakness. Like if it crosses down below.
What I like about J&J too is when you look at the pricing on options compared to like Tesla, Tesla's expensive. J&J isn't.
Right. Oh, it's a more stable stock. You know, it doesn't move. It doesn't move as dramatically as Tesla does. You can do pretty well on those in the money contracts. I could see because it's got decent range on it. It oscillates pretty frequently, but for the most part is more or less range bound. So if you want to get if you want to catch a swing on it, you have to go out by about a month or two, and then you can really capture those moves if you get it right. But like in the short term, it just kind of oscillates around like a $2 to $3 price range, and it doesn't get all that crazy. So I could see why this is attractive to swing trading investors. It probably keeps the day traders out of it.
Which I like.
Yeah. Yeah, because then you don't get that rug pull at the end of the day when things are finally looking nice, and then all the day traders just simultaneously take their profits, and then it just everything it just implodes. Yeah. All right. I'm liking it. I'm liking it, but I want to see Johnson and Johnson um, give back a little bit. I would want to see it respond positively to this support because this pullback, I really feel like this pullback is coming.
I do too,
Yeah.
because Friday was a huge green. Sorry, I
The
forgot your.
volumes, it's okay. The volume is really similar, but in fact, even a little weaker than it was during this run. So how much was this for? This is an 8% move, and the volume here is slightly less than that by about 5 million. Yeah, about 5 or 8 between 5 and 8 million shares less traded in this move. So it might not be done. It's possible. If I'm if I imagine myself being in a long position with Johnson and Johnson, I'd probably take my profits, especially if it gaps up in the morning. Because if it gaps up in the morning, and we end up somewhere like above 170, then like that's beautiful. Like that's a beautiful trade. There's no reason to hold on to that anymore. And then I would wait for that weakness to show up. Um, on the 1 hour chart, I'd be paying close attention to the RSI because it's probably going to give itself away much sooner. You've got a lot of rising tops on the RSI. It's been continuously moving up, right? As soon as you put in a lower high and this breaks, and you start to see lower highs on a trend down as the price is setting itself up higher and higher, that would be the moment to turn around on it. The other possibility is MACD crosses down and you get rapid momentum to the downside, short it immediately at 160. If it drops below 168, closes down there at any point this week, if it closes below 168, that's my entry. Take that down to 161. You can hold that position for maybe 2 weeks and then wait until you get that that nice entry down here in the 160s. Low 160s would be ideal for me.
Plus, it also seems, and maybe it's just, everything's different for the time periods, but as the dividend approaches, it seems like it retraces for some
Yeah.
reason. But I'm sure there's many factors in that.
Oh, there probably are. Yeah, I like the 50 retracement level here. I would expect after a move like this for it to retrace to the 50. It had this nice pullback. This was a good correction move on this bull flag. Moved up like so. Consolidated for a few hours, like a full trading session. It pulled back, and then it went and ripped again. If it forms another one of these bull flags and then breaks out to the upside, then I guess it's just not done. But what I'm anticipating more of is just a rapid decline. And as soon as it crosses below, like the 23, if it crosses and closes below the 23 retracement level, like I can see it going back down to the 50 at least. But there may even be an opportunity to get an entry all the way down here. So I'll be I'll add this one to my list because I want to keep an eye on this. This looks like a really good trade.
Thank you.
Yeah, I like this. Okay, we're watching Johnson and Johnson now. Maybe I should actually keep Johnson and Johnson near the top because this is a mega cap. It's one of the largest. It's not top 10 SPY, but it's up there. Let's go take a look at the stock market heat map just to see what else is going. The energy market has been soaring lately. Overall, XLE completely took back everything that it gave up in the month of September. So this is an inflation hedge if I've ever seen one. But most of the move has already happened. Now I'm waiting for some measure to come down from on high up at Congress for them to say, like, the oil prices are out of control. Smack. Go ahead and rug pull everybody all over again. That may take a while for them to actually do something about it, but for right now, hopefully everybody's enjoying the moves. Let's take a look at ExxonMobil and see where they're at. Yep, they hit my price target. God. I knew this was a good trade and I forgot about it. I would have had an entry down here at $88. I would have entered as soon as we had this breakout and I would have been long until December. This would have been such a good trade. I'm still mad at myself for this. God, I feel so stupid. Anyway, Exxon is getting close to, this is the biggest resistance that it's had, so I would anticipate at least some pullback, possibly to the 38 retracement level before there's another move to attempt to take this target of 112. If I do see a retracement and a bounce at this level, if it takes 100 and bounces, or if it takes 98 and bounces, anywhere in that range, then I'll think about going long for the rest of that move. But for the time being, this one is if it keeps going up, then there's not enough incentive for me to go and take that risk. I'd rather wait out the move, wait for the oil market to hit its top, wait for that peak, and then short it on the way down. and capture the retracement move, because that would still be a decent trade. Congratulations to everybody who got Exxon calls when I said take a look at Chevron Corp as well. Chevron was also ripping. This was crazy. See, I was early on this call out, but this bounce right here, this higher low bounce, perfect. Absolutely beautiful. Oh man. And it was the same shape, that same inverse head and shoulders showed up here. Pretty much identical chart pattern. Could have taken a long position on this breakout and play this to 190. I can see this one still ripping, so this might be one to consider. Since they have earnings coming up here in at the end of the month, maybe I'll play Chevron earnings. What I hope to see is a retracement pullback this week, so that I can get a good entry on this one, because this one's been moving straight up for a couple of weeks now. I want to see it calm down just a little bit to give buyers an entry point. There hasn't been enough profit taking here, so I would like to see it return to its 38 retracement level, touch 160, and then maybe that would provide a nice entry for bulls going back into it. So we'll see how it goes. We will see. Moving back over to the heat map. Tech sector has been going crazy. Let's take a look at Apple and see what Apple's up to. So Apple has broken above its 200. We have to see how this responds on Monday. If we open up in the same range and we're still above this 200, then it's not a trade for me. I'll wait it out and see if it chops around at this level above the 200 period moving average, which would be a bullish. That would be a bullish development for Apple. If I see rejection here, then playing it to the downside to return to the 140, the 141 would be my play there. And what I would expect is for Apple to form a bit of a bull flag, and if it oscillates down to retest this 100 200 period moving average on the 1 hour chart, then that would be a good take profit and a entry for a long position to take going into December. So I'm kind of waiting to see if Apple leads the market to the downside this week and pushes everything back down. If it ends up opening up a bigger gap above it, then I would probably actually short it right away, just for a very small short-term move, because after the week that it's had, it's been moving straight up and to the right on this ascending wedge pattern. And what I'm kind of expecting is for there to be a pullback for earnings, or who knows, maybe it'll just keep bouncing and oscillating up until earnings, and then we'll get the move to the downside. If we did get Apple back down in these levels where it retested this low, then that would be the flush down that I would go long on. That would be like my best case scenario to go long in Apple, is after a big flush down to this area. Take 138, completely knock out everybody that has been trading long since 140, and then immediately take the long position to ride out the rest of the move to the upside throughout the holiday sale season. Because this is still historically the best sales season for Apple in any market. Bear market or bull market, Apple tends to do well November, December. It leads the holiday rallies. There's only a few exceptions in the market when things were truly extremely bad. We had some like overarching economic conditions that completely pummeled everybody in the market, that Apple got caught up in the mix and investors panicked. Good example, good example is the collateral panic that happened in 2018. Apple sold off that season because all the banks weren't able to get collateral because liquidity in the collateral market for treasuries was so bad, and the overnight repo facility was shut down at the Fed. So nobody was able to trade cash for securities between the money markets, the banking institutions, and the Fed. So it would be extraordinary circumstances if Apple kept selling off for the rest of the year. That would be a pretty extreme circumstance. I'm going to go with what historically happens and just go with the most probable outcome that Apple will continue to move up throughout the rest of the year. And if we do end up getting that that bullish follow through, then I think that we end up seeing Apple back up retesting 165 on the high side. If we do get that full bullish follow through, especially if we can capture an entry down in this area and see Apple push throughout the rest of the year, it would probably end up look more like this, but you get my point. This would be my ideal setup. See Apple come back down here, get a long position, ride it out for the rest of the year, take profits before Christmas, and then wait to see where we open up for New Year's. So Amazon is getting very close to the take profit position that I had set up based on this trade. I already closed this trade that I had going on the paper trading portfolio, so this one's already gone. But got very close. Ended up taking a really nice profit when we got our entry here at the bottom of this move in the market when it touched 108. Now, if Amazon does end up testing this resistance, I think it's kind of an outlying possibility at this point. We've got a lot of resistance between 120 and 125. So I think that Amazon will likely reject here, and then we'll start to see the earnings compression from Amazon. So I'll wait until I'll wait until earnings or the end of the week this week, and then probably look to take a short position against Amazon for earnings. If we do get this rejection off of the 200, though, I don't think I'll wait. If it rejects here very quickly, then I'm not going to wait. I'm going to let the market carry Amazon to the downside, and take profit will probably be somewhere around 112. I'm not going to be too greedy with this one. I don't think that Amazon's going to get too much. I don't think that Amazon's going to see too much pain just yet. They've already gotten pushed down pretty far from their height in August. And if you notice, we've been hammering out a diamond bottom pattern on Amazon as well. So we kind of have this head and shoulders pattern, or it looks like a bit of a head and shoulders pattern. What I'm kind of expecting is for Amazon to tap this level and then round out this shoulder and come back down after earnings. But ultimately, I feel that Amazon is going to break this to the upside and move with the holiday rally towards the end of the season. So once we get past FOMC and all of the fears, or once the decision about whether to be afraid of the Fed is made, then we'll see that rebound. Netflix has been on an absolute tear. This I don't think can continue, but it may still fill this gap. If it does end up filling the gap, then Netflix will most likely come straight back down. We'll see what happens, but assuming that Netflix does fill this gap in such a short period of time, I think it'll come back down and retrace pretty spectacularly. So once we get up to these prices, if Netflix even comes close to touching 320, then my thinking is to go short for the rest of October and halfway through November, and play it to the downside. Netflix did surprise, but and it does look good, but this move was really fast, and the volatility on this will not. Investors are going to look to take profits very quickly after a move like this. So if this does continue and it breaks past 300 in short order, then don't be surprised if you see Netflix come all the way back down to 250 before we get through November. It'll probably still continue to the upside over the long term. Like if its trajectory keeps going this way, we'll probably continue forming out this channel to the upside. But this big spike up, it will have to come down if it keeps going this way. Let's see, NVIDIA, I think, will probably turn around very soon here. NVIDIA's been getting no relief from the market for a long time now, and it's been forming out this descending wedge for a long time. Now, if I look as far back as August when it formed this wedge, I would expect that very soon NVIDIA will start to get a big sales boost ahead of Christmas, and that we'll see their fourth quarter sales volume start to really pick up. Interestingly enough, the crypto market is starting to stabilize a little bit. I'm not sure how that will affect their sales for sure yet, but I'm cautiously optimistic that NVIDIA will get a pop in its sales. AMD actually also had a big move recently. So they moved down and got completely smashed, and now they're forming this big consolidation on a bear flag. If this actually turns around, and it might, we'll see how this structure forms out going up into their earnings. But if at any point if AMD breaks this structure to the upside, this is a perfect place to look for liquidity pools. This is actually exactly where to be looking for liquidity. And you see these structures that we're forming up here. We have a liquidity pool here and here, above us and below us on this structure. So allow AMD to bounce around these areas, but set alerts on these price levels. Like this is something I think everybody should do on their charts right now, is set an alert for AMD if it closes above or below these price levels. If AMD closes below, let's see. I'll go ahead and set up some alerts of my own, because I don't want to forget to do this myself, because this is a great trade opportunity. Liquidity pools like this is a perfect symmetrical structure. So I've got several liquidity pool triggers here on AMD. So as we watch this bounce around back and forth, keep an eye out for this. And when you see one of these triggers get hit, drop down to the 5-minute chart on AMD and look to see how the chart responds. Like this is a good example. AMD had this big drop down where it entered into this liquidity pool, and then it immediately closed green above it and recaptured that, support. You could have immediately taken that trade and grabbed all this profit. And this is a good way to get a quick trade in. I would set this up for a 2-to-1 risk to reward ratio. You could do 2.5, but for me, 2-to-1 is just about perfect. So this range where you see AMD trading and bouncing between these two levels, this is where day traders are very happy. This is a perfect range to be trading. So look for these opportunities where you see the price spike down very suddenly through these liquidity levels. If you want this indicator, it's called HTF liquidity on TradingView. You can find this one. I believe it was by HTF liquidity, SBTNC. HTF liquidity levels by SBTNC. These liquidity hunts, they happen very frequently. The sudden pop where it like gaps down on the day and AMD touches these levels. If you see it recapture support and close above within 5 candles, go long. If it recaptures support within 5 candles, then that is your signal to go long. You set your stop loss just below the wick, and then you can go for a 2-to-1, or if you want to capture a little bit more, you can go for 3-to-1 risk to reward ratio, or buy a call contract, whatever. But this range is very, very good. This is an excellent range to be trading in. So looking at where AMD has been trading, it looks like they're going to try to send it up into this area. So if AMD touches any of these, you see the same thing right here. It'll wick through it and then capture and then recapture support. Do the same thing. If you see it recapturing support in these levels, then you just take it to the short side, and then you use the last liquidity level as your stop loss, and then set it for a 2-to-1 or a 3-to-1 risk to reward ratio. This is an excellent trading range, and I know that you can do more with some of these moves. You can sometimes get as much as like 5 or even 6 or 7 risk to reward ratio, but I like playing it with, like, I want to be really sure that I can take my profit, and I want to get out of the trade quickly, because these institutions, they do this volatility, this zigzagging up and down crap is how they stop people out of their trades very quickly. So keep an alert on these levels, and every time you see this trigger, stare at the chart on the 5-minute time frame, watch for them to send a candle shooting straight through that liquidity level, and then take it back down within 5 candles, recapture that support, and then follow that direction. Wherever that support is, or if it's coming down from the top and it gets rejected by resistance, then you go short. So if it shoots up and then comes back down and then oscillates, go short and then take it to the downside. If it's just the opposite, it shoots down like this and then recaptures support and oscillates, go long. This is and if you need more details on this, I did a dedicated video on trading HTF liquidity on my on the YouTube channel. You can just tell you what, you can try the fancy new feature that I've been telling everybody all about. Let's see, we have a new feature called HTF YouTube Finder. Here, if you use that command /HTF_YT_find and then just type the term you're looking for, it'll take you to the video based on that search term. So I'm going to be doing a whole class. It's going to be a full course on trading, using TradingView, and all of that stuff. I'm going to go over chart patterns, technical patterns, how to find support resistance, how to use the moving averages, how to use different indicators. All that stuff is going to be in a dedicated playlist for teaching everybody how to trade from the ground up. And I'm going to make all of this stuff searchable straight out of the Discord, and everybody will get access to this. So, and big shout out to Flabbergang for creating this feature. That is going to help me immensely. Awesome. I'm hoping this will help everybody out. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.